Hello, welcome to CDH's YouTube channel. My name is Ko Fujimoto. I'm going to talk about FBAR Basics. If you or your spouse have foreign financial accounts, I want you to understand the FBAR rules and avoid unnecessary mistakes. So let's get started. FBAR report, in other words, report of foreign bank and financial accounts. These are the basic concepts. Aggregate value of account exceeding $10,000 at any time during the current year. It's not just a one account balance, it's an aggregate balance, not the year end, at any time during the calendar year. $10,000 is the threshold amount. Due date of FBAR is April 15. However, if you don't file it by April 15, it's automatically extended. You don't have to do anything until October 15, 6 more months. Okay? So 2022's FBAR deadline is 2023 October 15. This is not a paper filing, it's an electronic filing, e-files. It's called FinCEN 114. Is the name of the e-filing form. So what is the foreign financial accounts? It's not just a bank account, right? Number one, foreign bank accounts. Number two, foreign investment accounts. Number three, foreign cash value of life insurance. And number four, foreign corporate pension account. Number five, foreign accounts with signing authority or signatory authority. When I say foreign, it means that located in a foreign country. Okay, here I listed five, but obviously these five are not the complete listing. I'm sure there are many more. Okay, so the accounts are located in foreign countries, and it should be an account associated with account number, and it's a financial element to it. Obviously, I can't explain everything here, but you get an idea. So this is, in a nutshell, it's a FBAR report basics. In this slide, I'm going to talk about several ways to fall into a FBAR trap. Typical mistakes. Number one, inaccurate, reckless reporting. I don't really know the rules. I'm not an accountant. Well, let's put some numbers there and then send it out. Well, very reckless. And it could lead to a very serious problem later. Okay, or, well, how can the U.S. government know my account in my home country? Disregard, neglect, and that's a pretty bad idea. You're putting yourself in a significant risk. I did not know that my foreign pension account is subject to FBAR. Yeah, I used to work in, let's say, France for 15 years. And I worked in France for 15 years and I earned the right to receive my pension based on the number of years I worked in the company in France, or a company in Taiwan, or Singapore, India. Doesn't really matter if it's located in foreign country. I thought that's FBAR only applies to bank account. No, pension account is a financial account. It's subject to FBAR rule. You should have reported it. I thought it applies to an account over $10,000. I have one at around $9,000. I have the other one at $5,000. They are both under $10,000, so I don't have to report. It's not right, right? And aggregate maximum balance during the calendar year. If it exceeds $10,000, you must report all the account one by one. Number 4, parent. My parent, I didn't know. I didn't know that they saved money under my name until yesterday. Parents saved money under their children's name in their home country without informing the child, or without informing the children. Probably would be a accurate English. Anyway, I think it's very natural for parents whose children, very similar to my situation, recklessly ventured out to the United States without very concrete and reasonable plan. Well, I was young, but I was reckless too. So in that case, naturally the parent likes to take care of or concerned about their future, the children's future, so they save money and under their name, and which it could lead to a serious problem for the children who live in the United States. Well, my parents passed away. In this case, let's say my father passed away. I had to go back to my country and organized, cleaning my father's belongings. And then I found this statement with my name on it, and there is a cash balance. Wow, that's under my name, it's my financial accounts. I did not know that I had it. Well, last case is my spouse never told me that she had an account. We are fighting joint tax returns, and obviously we missed reporting my spouse bank accounts and investment accounts and so forth. These are very typical cases where our firm, CDH, have experienced in trying to cure people's past FBAR issues. So the penalties for filing an FBAR, if you file it correctly, obviously there's no penalty. But if you don't file, or if you incorrectly file, the willful violation penalty is the greater of $100,000 or 50% of the account balance, which is obviously very high. I think $100,000 is indexed to the inflation. So in reality, I think it should be, higher than $100,000. Willful violation, you have the foreign financial accounts, but you intentionally did not report. That's a willful violation. If you have a non-willful violation, I didn't know the rules, or I completely misunderstood the rules, or I did not know that I had an account. It's a non-willful violation. It's a $10,000 per violation. And potentially, criminal charges can be filed against you, especially I think number one, the willful violations case, which I'm sure you want to avoid. Any of these penalties, they are so severe, and also I would probably I should add that there is a whistleblowing provision that the whistleblower can get, I think, 15%, 15 or 30%, either way, the penalties as a compensation for telling the IRS that this person has a foreign financial account that should have been reported. If you want to know more, this website address is IRS's website address. You can look it up and find out more. I think this page is more general, basic concept. It's really a starting point of your research. So let's talk about how to cure the issues if you find out that you have issues. I showed this diagram because there are three methods. The three methods, if you look at the very left, you have a FBAR issue, and number two, I put non-willful. I am not going to talk about the remedies or way to cure your willful violation here in this video. I am going to specifically talk about the non-willful violation. So non-willful violation can be cured by two separate ways or two separate criteria. One is if your taxable income understated. The other way is taxable income was correctly reported. Obviously, if you misreport, if you did not include, let's say, interest from your foreign bank account, your 1040's interest income was probably understated, or dividend income from your investment account, you misreport. If you did not report the dividend income, then your 1040's dividend income was underreported. Okay. However, country like Japan, checking account. Well, there is no checking in Japan. It's a regular bank account. At least up to now, probably for the last 20, 15 years, they pay very little interest, maybe 10 cents, 5 cents, 20 cents, which is in a 1040 is way too small to be, accounted for. So in that case, your taxable income on your 1040 was probably correct, right? You don't have to pay additional taxes. So two separate ways. If the taxable income was understated, there are another two ways to cure. Streamlined domestic offshore procedure is the first one. Second one is streamlined foreign offshore procedure. I may be missing one word. I think streamlined domestic offshore reporting procedure. maybe that might be the case. However, the bottom line is, depending on your location where you live, it could be domestic procedure versus foreign procedure. In aggregate, people call these two methods as a streamlined procedure. The bottom one, the third one is called delinquent FBAR submission procedures. In a nutshell, streamlined procedure requires 6 years of FBAR reporting, 3 years of amended 1040s, and non-willful statement. You need to document and submit the non-willful statement in a particular form. There is a prescribed fixed form that you have to fill out electronically, I think. The difference between domestic and the foreign procedure is the penalty. A domestic side, there is a 5% penalty. How do you calculate 5%? Well, when you prepare 6 years of FBAR, at the same time you would pick up the year-end balance of those 6 years and then pick the highest balance from those 6 years, obviously in the US dollars, translated US dollars, and apply 5%. That's your FBAR streamlined penalty, and you probably may need to pay additional taxes because you are amending 3 years of tax return, and when you amend your 3 years of tax return, there will be probably underpayment interest. I don't think amending the returns would incur any penalties in this case because you're already paying the penalty for under streamline. However, streamlined foreign offshore procedure, there is no penalty. It's a huge difference here. Anyway, as a final comment, I like to add that once you find you have issues, I think you should act quickly. Don't sit on it for too long. Contact professional firms like us and try to get started of curing your prior issues. I think timeliness of trying to collect the past program is one of the significant factors for the IRS to consider when they evaluate the streamlined procedure or when they evaluate your case. And at the same time, I think your past compliance history of filing tax returns is also an important factor for the IRS to consider. So by saying that, I like to end my short video, but here is the IRS site where they explain the streamlined filing compliance procedures. There are just too many words here, but streamlined is the keyword. You can look at this IRS site and get more information. This is our disclaimer, and this is our ending page of cross-border practice. Thank you for watching our video. Appreciate your time and see you next time.